And welcome to the look ahead for Wednesday, the 13th of November, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, overnight, we'll be watching out for Australian wage growth data. The European session is quiet tomorrow. Then, over in the US, we'll be looking out for inflation data, also several Fed speakers, as well as oil API inventories. Now, the main focus of tomorrow and indeed this week is actually on US inflation data, CPI, expected to tick higher up to around 2.6% annually from 2.4%. Core inflation could also move higher, up from 3.3% to 3.4%. Now, the data comes after the Federal Reserve cut interest rates by 25 basis points in the meeting last week and alluded to another rate cut in December. At least that's what the market is pricing in, albeit at a lower expectation than just a week ago. However, the Fed is expected to rein in rate cut next year in 2025. Rate cut expectations have been lowered for next year, and that's partly due to the strong data that we've seen coming in from the US, which will indeed include hotter than expected inflation, or at least a tick up in inflation. But also we've seen other US data remain pretty strong. And also we on expectations of inflationary policies from Federal Reserve, from Trump when he takes power in January next year. So we are looking here at gold. Now, gold is obviously suffering under expectations of slower rate cuts. It's also suffering because of the impressive US dollar strength that we've seen since Trump won the election. Now, gold has fallen away from that record high of 2,790. It's taken out the support there at the 2,685. It's broken below that near-term upward trend line. We're now testing this trend line that goes back to March 2024, just seeing whether that will hold or not. That's also the low that we saw in October, just above the 2600 level. So if we get a break below that, then that's going to open the door to this low here, which is the mid-September low around the 2550 level. That's also the 100 SMA, but we're already here forming a series of lower lows. We also got the RSI below 50, so momentum would support a further break lower. However, it just depends how we see gold treat this key level here and the rising trend line support. On the upside, any recovery is going to need to take over that 2685 level. That's also the weekly high in order to extend gains towards 2700 and the 2790 all-time high. The other one that we should be looking at with relation to strength in the US dollar is the euro US dollar, because that has had a very sharp decline over the past couple of days. We can see, it was just up at the 109.35 level at the beginning of November. Now we're down at 106, attempting to break through 106. Now, if we break through 106, that's the level that we saw in April 2024. That means we'll be heading into a new 2024 low. Opens the door here to this level here, which is 104.50, which was the level from October 2023. So that's if we're seeing, if we just have a look, there's a falling channel that it's trading within at the moment. It's attempting to also break out of that falling channel. So it's pretty key support level that we're watching out there. If that does hold, any recovery on the upside needs to take 106.70. That's the level that we saw offering support back in June. That's the level that buyers need to overcome in order to bring 107 into play, 107.50, and back towards the 108 level. Let's also just have a quick look at oil. We had a pretty steep drop-off in oil yesterday after the OPEC monthly report downwardly revised its demand outlook for oil, owing to concerns over China and weakness in China. Downwardly revised demand growth in China for this year and for next year. And so that's sort of combined with the disappointing stimulus news, has pulled oil prices sharply lower. Also, you've got the stronger US dollar coming into play as well. Again, as we talk about often, 67.50, that's the level we'll be watching for. Got down to 67.75, so we're in that region. It's just sort of edged higher from that. But if we get it below 67.50, 67.25, then that's going to open the door to the 65.50 level on the downside. And then below that, we'll be looking at this 63.50, 63.60 level. On the upside, needs to get above 71.50 to 72.50, as we've been talking about some time now, in order to stage any form of recovery. Excellent. I hope you've liked what you've seen. And if you have, then please do give this video a like. And to receive more videos like it, then please do subscribe.